It's time for the Jupiter Joe Money Show. I'm Jenny Thomas, and we have Jupiter Joe, our host. And today we're talking about a few things, but why this income doubler matters and what the heck it is and what's the big deal.
So I just want to make sure that people understand that, I see people all the time, they want to buy these multi-year guarantee annuities, which we do offer clients. You get a fixed rate, our 5-year fixed rate right now is 6.15%. If you're going to take interest, if you're going to let interest accumulate at 6.3%, which is great. It's a good rate of interest. Blah, blah, blah. The problem with it is that it really doesn't do anything for the client. Here's my opinion. If you're over 65 years of age and you're going to need income at some point in the future, a year, 2 years, 3 years, 5 years, whatever it is, you should be buying an income annuity rider. Okay. And what it does, it provides you with income for the rest of your life. And by the way, if you ever get sick and you can't perform 2 of your daily activities of daily living, basically what it does is increase your income by 100%. So you go from, let's say you're getting $2,000 a month, it doubles it to $4,000 a month. Now, I have a gentleman that came in my office and we were talking, and he's going to go into independent living. And, he's in his 80s. And I said, you really should consider an income doubler, which is attached to this annuity. And if you ever need it, it doubles your income. Now, in his case, he was putting in over $1 million. So his income for the year was going to be about $90,000 a year, which isn't bad. Yeah, and he's going to live off that to pay for the independent living. But more importantly, if he ever gets sick and he needs any kind of assisted living, home health care, nursing home care, chronic illness, it has a chronic illness nursing home waiver in it, built in. And what it does, it doubles your income for 5 years. So you never run out of money, basically. Well, you could run out of money, but the bottom line is you're getting this 5-year income stream. And then when that runs out of money, it goes back to the original amount. So you could be getting $100,000 a year, right? You get sick, you need it. It doubles your income to $200,000, and then it pays you for 5 years. That's $1 million of income. And then it goes back to the original amount. And guess what? It not only covers you, but it also covers your spouse.
See, that's huge.
That's a big deal.
I was just thinking, a lot of people, they have annuities, they have these accounts or these plans, and the only time they actually know if they have this protection, this income doubler, is if something happens. If they do need it, then they'll know if they have it or not. Yeah.
So we tell clients up front, this is what they'll come in my office and we'll talk about things and we'll say, this is what I'm recommending right now. And a lot of times what we'll do is we'll show them, they may do the multi-year guarantee annuity with some of their money and then some of their money in the income annuity. And the benefit is that they have this other product that will protect them further. Right. Annuities are insurance products, and these insurance companies do it pretty well. You're not only ensuring that your money's going to be safe, it protects you, lawsuit protection, asset protection, passing assets to the family, those sort of things. But it also ensures you that if you get sick, it does specific things for you. Okay. No other product does this. No other product guarantees you income for life. No other product guarantees you that you won't run out of money. By the way, we had that client call me. And we had done it the deal last year. She bought a couple of annuities from me, and one of them was an income annuity with the income doubler. And we started talking. She says, hey, so-and-so, my husband's going to retire, and I want to find out how this works if we turn the income rider. I said, okay, well, you're going to get income. She says, okay. She says, how much are we going to get? I said, X. And she says, okay, well, how long does that last? I said, forever. She says, well, what happens when we run out of money? I said, you still get paid. She goes, you're kidding me, right? I go, no. And then I said, she said, what if I get sick and I need the money? Well, it has an income doubler built in that you double your income. She said, this is ridiculous. She said, I can't believe this. That's what you sold me? I go, yeah. She goes, I can't believe it. I love it. This is great. She goes, this is the kind of thing we've been talking about to plan for and we were worried about, and we already have it. Now, of course, I explained it to them last year, but sometimes they forget all the details, right? But the point is, if you're thinking about buying an annuity or you have an older annuity, now is the time to consider these new annuities. They do change, and these income doublers and the income rider is a big deal. I know it sounds like gobbledygook right now, but when it's this simple. You give us a lump sum of money, it turns into an income stream, and if you get sick, that income stream doubles. That's simple. Okay. Now there's more to it, of course, and we go through it, but that's how it generally works.
If you're just tuning in, this is a Jupiter Joe Money Show. Jupiter Joe, he's a financial advisor for over 40 years. We're here in Jupiter, Florida, our office, and Joe has free appointments over the phone or here at our office. So go to jupiterjoe.com, book your free appointment, or give us a call, 561-743-0999.
So, this is interesting too. You can put a Roth. The last show was Roth conversion. Mm-hmm. You can put a Roth conversion in one of these annuities with the income doubler, and then you're getting tax-free dollars for life.
Wow.
For you and your spouse.
Okay.
And if you get sick, it also doubles your income tax-free. Now think about that. I some of the times I bring this stuff up because other people don't even either know. I guess they don't know it or they just don't talk about it. I mean, I listen to a lot of our competitor radio shows and podcasts and whatnot, and I swear to God, I talk about stuff that I hear nobody else talking about. I don't know. I sometimes think, am I making this stuff up? Because I know about it, and I'm trying to tell people about it because it's so important,
Yeah, I think I've seen over the last 4 or 5 years, just the impact of this income for life has on a lot of our clients. Mm-hmm. They don't realize what the big deal is, where they don't have to worry about the market going down.
So when you really see this stuff work well is when somebody puts in $500,000 or $1 million. Think of it this way. I just had a guy on the phone. He's telling me he has 10 different multi-year guarantee annuities, 10 of them. I didn't sell them to him. Some other gentleman did. And I started talking to him, and I said, why are you buying so many MYGAs? He said, well, my guy told me I should buy them. And I said, well, what's your goal? He said, income. And I said, are you married? He said, yeah. And I said, do you have any health issues? He said, well, yeah, I have this and that. My wife does, nothing major, but it could turn into something. And I said, if we put $1 million, he had over $1 million. I said, if you put $1 million into this, you're going to get $110,000 a year. He said, $110,000? I said, yeah. I said, it's like a payout of like 11%. I said, and you're going to get back 3.1 million, whatever the number said, like 3 to 1 on his money. I said, that's not if you get sick. If you get sick, you're going to get another $1 million. He goes, oh my God, how does this work? And he goes, why didn't my other guy show me this? I was guilty of this in my younger years where I wouldn't show clients the different products we offered. Mm-hmm. And I started showing clients that you need to do more than one product. You just don't buy one annuity and one and done kind of thing. You do need to look at other aspects of why these other annuities can help you. Not only are you further diversifying your money and protecting your money by being with different companies, but you're also diversifying how you're going to use that money in the future. Doesn't it make just sense?
It does. And a lot of people, they have CDs at a bank. So they might have CDs at a bank, or they might have these fixed annuities that they don't even remember they have. They come up for renewal just like a CD does. Yeah. Why not take a look at them and see, look at your goals now. Do you need income now or soon?
We sit down with clients all the time, and sometimes they don't even know when they're going to need income. I'm the same way. I'm 65 years of age, and I say, look, am I going to need income in 5 years or 10 years? Depending on how things go. Right now, I don't need the money, and I'm putting off that day for a later date. And I think a lot of clients do that. Here's another thing that these income riders work for. If you have to take a RMD, a required minimum distribution, because you're 73 or older, why not take an RMD through the income rider? And it's usually twice as much. So if your RMD is $20,000 a year, with these income riders, it's probably $40,000 a year. Now, don't hold me to that. We're going to run it specifically for your age and the amount you put in. It's based on age. It's based on how old when you're going to start taking income at what point and how much the balance is, right? But generally speaking, it's usually almost 2 to 1. You're going to get 2 times the amount of money that you would if you pulled out your RMD, and it's guaranteed for life, and you can't run out of money. If there's a zero balance, we still pay you. If you pass away, we pay your spouse.
Isn't that the biggest difference when you have an account that has an RMD? What happens when you keep going through life? Yeah. It could be zero.
It could be. And that's what we were talking about. So the stock market's very challenging right now, right? And there are people making money even though the market goes down. In fact, I was just watching this video online, and they're selling this product. It's kind of an AI product where it shows you how to make money when the market goes up and when the market goes down. But people don't understand that if you're pulling out a systematic withdrawal of interest, that's not just interest, but it's also principal out of your 401k or your IRA when you do turn age 73. That RMD may be pulling principal out. So if the market's negative for the year, you lost 10% and now you need to pull out 4 or 5% for your RMD, that means you're down 15%. Well, how many years can you go like that before your balance is zero?
Right.
This money is guaranteed when you put it in one of these annuities. Guaranteed. I don't know any other financial advisors, unless they're selling guaranteed income annuities, can say the word guaranteed, right? Because we're obligated to give you the straight scoop on this stuff. Your 401k is not guaranteed. Your IRA is not guaranteed. The mutual funds are not guaranteed. Now, we're going to show you why guaranteed makes a big difference. Yes, they're not the greatest thing since sliced bread. I've been saying this for 20 plus years, that we've been offering our clients annuities for 25 years. And they say, well, what do you think about gold? Yes, buy gold. What about real estate? Yes, buy real estate. I think you should be very diversified. This is just another product, financial product that you need within your portfolio,
Right. And even over the last 4 or 5 years since I've been working for you, the rates, I didn't realize how much the rates do change based on what's going on in the economy.
Yeah.
And so a lot of our clients, they have these fixed rates that are coming up for renewal, and their goals may change. They might want another 3 years or another 5 years, or they might want to have this income annuity where they're having the income for life. They're ready for income.
So let's talk about that, because that's a great topic right now. We're getting a lot of phone calls from people that do have CDs that are renewing, or they have a high yield money market or savings account that isn't so high yield anymore. Okay. What's happening is interest rates are coming back down. Now, the insurance companies are still keeping the rates pretty high. We're in the 5s and even 6s for 3 years and 5 years fixed, where the banks are at 3 and 4%. We're always a little bit higher because we're able to buy bonds longer term. Okay. And we're buying government bonds, not me personally, but the insurance companies, right? And this guy Warsh, okay, I think I said Marsh before. Marsh and Warsh, pretty close. But anyway, Warsh, who's going to be the new chairman of the Federal Reserve that Trump's going to put in there, eventually he's going to get in there. It's just a matter of time once Powell is out. He is going to lower interest rates. Mark my word. They will be down to 3% or lower by the end of this year. Trump wants people to be able to buy a mortgage. Okay. He wants young people like you to be able to buy a house, right? And they want to be able to get it qualified for a mortgage. And that it's great for people like you that are going to buy a house, or Evan or Dana who's going to buy a house. But it's good for car loans. Car loans are like 8%. Somebody came to my office the other day. She's paying 8.49% interest for a car loan. They used to be 3%.
Yeah.
It's ridiculous. So it's going to help you people with that. But it's not going to help seniors that have high yield savings that are 3%, okay, or 2%. People have a very short memory in this country, and unfortunately, I don't. Fortunately, I don't, I should say. Pre-COVID, you were getting 0.50 on a high yield savings account if you were lucky. Okay, I did seminars on this where people would get 0.10, and they tell me, I say, how much are you earning on this? They go, 1%. I go, no, that's 0.1. That means a tenth of 1%. They go, no, I thought I was getting 1% this whole time. We had a gentleman come in. He has a stable fund because he didn't, during COVID, and this has happened to this particular person, it happens to many clients. They'll put their money, when the market's changing, they'll put it in a stable fund, which means that it's fixed within their 401k. And we were looking at some of the renewals on these, 0.45, 0.65% interest. That's less than 0.5% on some of the 0.45 is less than 0.5% they're earning for the last 5 years or 4 years. You have to know where your money is at all times and what it's doing. Okay. Yes, we have great rates. Yes, we can do this and that for you. However, we need to find out what your goals are, what you're trying to accomplish, and then we'll plug it into this plan of action for you so that you don't have to worry so much. People are concerned right now. Me and Mom were just talking about the stock market this morning. And I wouldn't want to be a person right now that needs that money in a year, 6 months, 18 months, 24 months. Yes, things are going to get better. The war is challenging right now. The oil embargo, basically. It's not called oil embargo yet. It used to be called in the 70s. Anybody who lived in the 70s knows it was called an oil embargo, whatever the hell that meant. But right now, this oil situation that's going on with Iran the war in Iran, which isn't much of a war. Trump just bombing everybody, and they don't have much of a choice. But it's challenging right now. The market is very challenging, and people have to understand that there are alternatives like these annuities with the income rider that we can get you a bonus, get you a fixed interest rate, and turn your money into an income stream for the rest of your life and your spouse's life that you can never run out of money, even if it goes to zero. Now, does that sound impossible?
I mean, in theory, it's not.
Right. But it sounds impossible.
Right.
Well, this is what happens when you have a pension. If you work for the state of Florida and you have an FRS, a Florida Retirement System pension plan, and you work there for 30 years and you have $500,000 or $750,000 worth of money, and you now retire, you plug into their payment. And it's $3,000 a month for the rest of your life. And if you pass away, your wife gets $3,000 a month. That's called an annuity. Mm-hmm. So your pension, for anybody out there, is an annuity payment. A lot of people don't know that. They hear the word pension, they go, oh, it's a pension. It's an annuity. And that's what we're doing for you. I tell people, this is your own pension, right?
Yeah, your DIY pension.
There you go. Do it yourself. There you go.
Yeah, I think it's just so important for people, especially people who've been listening to the Jupiter Joe Money Show. They've heard you, they've seen you with, Brian Craig, heard you. Mm-hmm. Now's the time to get a second opinion, a third opinion. And, you're the person who can do that for them.
Yeah. And, I want to talk about something that just popped in my brain. You don't want to be rushed when you're making these decisions. Mm-hmm. I know people want to get the money out of the market as fast. Well, that's another thing. Let's just talk about this right now. You help clients transfer their money from their 401k to us. Mm-hmm. It's getting harder.
Yes.
People don't realize it, but the financial institutions actually slow down the transfer of money because they don't want the money pouring out. That means they make less money.
Right.
So they actually put a hold on it. And they're doing this. So right now there's this private credit deals that were out there with Blue Owl and Apollo. They do private credit loans and they do private equity loans. And the big deal was, put your money in here. You're going to earn 8, 10, 12%. You share in the growth and all that. Well, guess what? They're doing horrible. And I think it's going to create a big problem down the road with banks. And the whole financial industry right now is very low stock-wise. And the reason being is because these companies like Apollo and Blue Owl are having major financial problems. And I heard Jim Cramer yesterday on Mad Money saying, hey, look, if these guys they keep saying they don't have any problems. Well, if you don't have any financial problems, these companies, why don't they pay the people back their money? Why are you limiting how much money they can take out? Right. Why are you saying you can only take the money out quarterly? We had a client that had this, right? Mm-hmm. And they could only take so much money out every 3 months. Mm-hmm. Okay. It drove them crazy. This was a year ago, and I didn't know what was going on. And then I started hearing that all these private credit and private equity loans are having huge problems in the financial industry. That's going to trickle down. That means it's going to cost you money down the road. And it also means that your money may not be that safe. Okay. And then this is how financial collapses happen. This is how the financial collapse happened with mortgages in 2008, 9, 10, and 11 when the market crashed. Mm-hmm. Same kind of crap with Lehman Brothers, So for listeners, how do you protect your money? Don't buy stuff you don't understand. Now people say, well, you're selling an annuity and I don't understand it. Yes, but I can explain it to you in layman's terms how it works. You put in a lump sum of money and you get an income stream for life. This is what it contractually does. Means that's what it does in writing and it's legally binding. Mm-hmm. These private credit and private equity and things you don't understand, they have limitations and REITs, real estate investment trusts. Mm-hmm. I wouldn't buy one of those if they told me they give me 15% interest a year. They'll give you interest, but you never know how to get your money back. I can't remember, I wrote it in my book. Tell me about the return of my money before you tell me about the return on my money. What that means is don't tell me I'm going to get 5% interest or 8% interest, but how do I get my principal back? Right. Are you ever going to get your principal back? I have a client right now. She was telling me that she's got a REIT and the value has done nothing but go down. She put in 100. It's worth like 19,000. She does get some checks from it, but her principal has gone from 100 to 19,000. Oh my God. So yeah, okay, well they're paying her interest, but she's never going to get her principal back. These are the things you have to ask questions about when you're going to do something. Find out what the limitations are. So true. Yeah. I'm talking a lot today about this stuff, but I wanted to do a couple of shows that are more about thinking about your money more than just making some moves out there. You know, you have to think about what's right for you first. You know, I always tell clients, look, I can tell you exactly what, every day I get somebody in my office and I know exactly, as soon as they open their mouth and they start talking, they tell me what they're doing. I know within 5 or 10 minutes what they should be doing. Okay. It's whether you're going to take my advice. I told one lady today, she's a very nice woman, and she was listening. She said, no, I want to do exactly what you say. And I said, I wish more people were like that, because I can tell you exactly what to do. It's whether you're going to listen. Isn't that like when you go to the doctor? He says, okay, you're 30 pounds overweight. You need to diet and exercise. You hear it all the time, right? You need to have less sugar, less salt. These are like your mom cooks, you know, less sugar, less salt. We hate the butter she uses because it doesn't have salt in it, but she knows that less salt is healthy for you.
Right.
Right. Sometimes other people, like your mom, know more things about things than I do, like cooking. You know, she cooks very healthy, right? It's great for us. I hate it sometimes. You know, I want to have the sugar in it and the salt and blah, blah, blah. But it's the same thing with this financial stuff. You need to know about it. And I'll give you an example. We got a roof that we need, right? And I've been calling around, and the prices are crazy. I mean, just crazy. I mean, you can buy a house for the amount of the roof cost, right? Wow. And I started shopping, and I said, hey, I think one guy goes, oh, we can do this. I said, listen, what's your price? You know, it gets to the point where you just want to know the bottom line. But you have to accept that these people do know more things about roofs than I do, right? And it's the same thing in my business. I always say to people, what'd you do for a living? I had a doctor in my office a couple of weeks ago, a couple of doctors, but anyway, one specific doctor. And I said to him, look, I said, you know, I don't know anything about your business, and I couldn't do it, but this is what I do for a living, you know, and this is how I can help you. And then once he realized it, he said, you know what? He let his guard down, and he goes, yeah, you know what? This guy knows what he's talking about. That's what it's about, you know?
Give Jupiter Joe a call, 561-743-0999, or go to jupiterjoe.com, and we'll see you next time on the Jupiter Joe Money Show.
Thank you, Jenny.